And welcome to everybody today. Thank you so much for joining us. So today's session is on exploring fintech and financial planning. I'm delighted to introduce Azmi. Azmi is our instructor for today. Azmi is a CFA charter holder and a senior director for content development at CFA Institute.
First, a couple of things about the investment foundation certificates. Its goal is to provide a comprehensive overview of the investment industry and its structure, function, and role in the global capital market society. If you are relatively new to finance, you'd like to learn more about finance, this is one of the best ways to introduce yourself to it in a very structured way. You get to learn real, tangible knowledge of the fundamentals of the industry and receive a framework to understand, solve, and communicate solutions for complex issues. Course 1 is industry overview and structure. Then we got types and functioning of markets, where we're talking about exchanges and over-the-counter trading of instruments. In course 3, we talk about what those instruments are, so what is traded on exchanges and over the counter. In course 4, we'll look at investment inputs and tools. And part of today's webinar is really part of course 4. AI is indeed an investment tool. What does fintech really stand for? It's technology in finance. And any kind of technology, any kind of recent technology could potentially be called fintech. It's all about improving financial services through innovation. And how do you improve financial services? You either make financial services faster, or you make financial services cheaper, or you make financial services better. We are already seeing some impact of this on things like digital payments, transfers, trading. If you take a look at online-only banks that have come about in the last couple of years, they have absolutely transformed, for example, how you spend money when you're abroad in a foreign currency. You can easily use your mobile phone and swap from dollars to pounds to euros and incur very, very low transaction fees for doing that, which until a few years ago would have been unimaginable. Another aspect of fintech is there's disruption and innovation. Of course, for example, going by the example of foreign currency payments, banks in the past, especially traditional banks, used to earn a lot of money through foreign currency spending fees and commissions and so on. And this is, of course, now disrupted. It challenges traditional models with services. And another example of this challenger is robo-advisors, which we'll talk about later in today's presentation, and peer-to-peer lending, and finally, blockchain technology or digital ledger technology, which is already transforming many areas of finance, things like smart contracts, insurance, payments, and so on. Even though cryptocurrencies can be almost a distraction in terms of the power of this technology. So, what is the role of fintech in financial planning? Let's talk a little bit about that. What can financial technology do, and what can financial technology improve in financial planning? One area, and perhaps some would argue the most exciting area of this, is automated advice. AI tools can streamline the advisory process by generating personalized financial plans based on user data. So it is now possible for AI systems to survey the clients, interview the clients, ask many questions, and then as a result of those interview questions, figure out what is the risk and return requirements and other limitations and other constraints of this client. And then as a result of that, recommend a particular portfolio. And you might say, well, isn't that what wealth managers do? Yes, wealth managers do that, and many wealth managers do that extremely well. The problem is, if you take a look at the wealth management sector, there are many clients who are underserved. So there are classifications, of course, within wealth management. It starts out at the top with ultra high net worth individuals. So these are the Jeff Bezos and Simon Cowells of the world, as well as famous footballers and other athletes and so on. Below that, you have the rest of the high net worth individuals. So again, these are very wealthy clients, and they will be served by very, very good wealth managers, but they're not necessarily going to have somebody just assigned to them. And then after that, you have another section that will go by various different names. The most common one is something that you would call mass affluence. And this is the section that is perhaps, as of now, or until now, has been massively underserved. So what is mass affluent? I don't want to put dollar figures or pound figures into what makes you ultra high and mass affluent, because that really differs from one geography to another. But your typical mass affluent client would be perhaps two parents who are both very highly successful professionals. So for example, I don't know, a surgeon who is married to a successful lawyer. But unless they are running their own company, they're entrepreneurs, or they have inherited wealth, they wouldn't necessarily get into the high net worth individual category. And that is the automated advice is possibly the most promising for the mass affluent category that is slightly underserved right now. What else can fintech do in financial planning? It could be enhanced risk management. Artificial intelligence can and does analyze market trends and economic indicators much, much more quickly and much, much more comprehensively than humans can. And that could then be used to identify potential risks and optimize client portfolios much, much more quickly and efficiently than we have been able to before. Another area is data-driven insights. So advanced algorithms based on AI can assess very, very large data sets to provide actionable insights on market opportunities and investment strategies. Another, perhaps some would say, less exciting part of fintech in financial planning is more efficient compliance. Anybody who has ever tried to open a new bank account or borrow money or make a large deposit will know how time-taking the compliance procedures can be. And of course, the bit that we see as customers is only the forms and so on that we have to fill out. But there's a lot more that's going on within the compliance offices of financial services institutions. AI can help ensure ongoing compliance by automating suitability checks and detecting biases in financial advice and detecting red flags much, much more quickly and perhaps even more efficiently than humans can. So let's now turn our attention to the first aspect of financial planning that we've talked about, providing personalized client solutions. So how will artificial intelligence benefit financial planning and wealth management? Now, personalized client solutions in the past used to be only the reserve of the very wealthy, of the ultra high net worth individuals. Well, this, as you can imagine, requires a lot of expertise, and to justify a wealth manager spending this kind of attention, devoting this kind of attention to a single client, well, you have to have a lot of money, assets under management. So how about for the mass affluence? Up until now, the client solutions that they would be offered would not really be personalized, but it would be more in the lines of choose from 6. You answer these 10 questions, and we will tell you which of these 6 portfolios is the best for you. And I think you will agree with me, I hope you will agree with me, when I say that you can't really box all clients in that way. You can't really do one size fits all, or you can't even do 6 sizes fit all. That's not really how personalized wealth management works. But at the same time, the amount of assets under management wouldn't really justify this highly personalized approach. So this is one area where AI has the potential to benefit financial planning and wealth management. The other key area is streamlined operations. We talked about data analysis. AI can provide us with insight into client behaviors and market trends, and that could then turn into actionable investment strategies. Now, finding the optimal portfolio for each client is not really a one and you're done kind of activity. As times change, two things will happen. Market conditions will change. The risk and return features of different asset classes, like domestic equity, international equity, fixed income, and so on, those will change over time. But as time also, but also the client's needs will change over time. So AI can help create the optimal portfolio, but also maintain the optimized status of the portfolio as clients' needs change and as markets change. Finally, AI can help with client engagement, and there is already a lot of this that's going on. Not just in financial services, in retail is probably one of the best examples of that. I take a look at what's on sale. I take a look at what new things that they got, and so on. And if I don't buy, the very next day in the morning, I will see an email on my inbox saying, Azmi, did you see something you like, or have you forgotten to check out? So this is AI-driven personalized communication. And as AI becomes more advanced, we will be able to do personalized communication for things that are a lot more complicated than buying a new pot or buying a new potato peeler. And finally, we mentioned this on the previous slide as well, AI can really help with risk mitigation. It can help us monitor and manage risks in a much, much more quicker and efficient manner than humans can. So let's talk about the financial planning process. What is the financial planning process, both for robo-advisors and for the human touch? Let's talk a little bit about that. So it all starts out with the wealth manager, whether that's a human or a robot, talking to the client. And what is our goal when we're talking to the client? We want to know about the client's objectives. We want to know about the client's constraints in terms of, well, I need to retire in 10 years. And all of this leads to something that's called the investment policy statement. So the investment policy statements in financial terms will tell the portfolio manager, who will put together the portfolio, the ideal portfolio for this client, what this client needs, how much risk they can tolerate, how much liquidity they want, what is their time horizon, everything else in a financial language. Within the same financial firm, another team is doing asset class research. What are the risk and return expectations of different asset classes, as well as how those asset classes interact with each other, which is to say their correlation, to use a statistical term. So how does an optimal portfolio get formed? An optimal portfolio will take into account what different assets and what different mixtures of assets can generate in terms of risk and return, and what the client needs. So those two things merge together and then results in the optimal portfolio. What robo-advisors aim to do is to automate this process. But automate this process by taking into account a detailed survey of clients' needs and objectives. And at the same time, also automate the research and match this automatically to come up with an optimal portfolio, a much, much better personalized portfolio for the client. So let's talk about the recent past and the future for robo-advisors. They've been around for a while, and in the beginning, they were pretty basic. You would answer a few questions about your risk tolerance, and then they'd stick you into one of a handful of cookie-cutter portfolios. It was efficient, but not exactly tailored to your individual needs. Now, they've gotten a bit more sophisticated. They'll consider things like how long you plan to invest, which is your time horizon using financial terminology, your income level, and they will even include some tax considerations into their calculations. But still, more often than not, you are sort of nudged into one of several preset paths. But the exciting part is where this is headed. In the future, and this is not going to be the distant future, in the future, we are looking at robo-advisors that don't just serve you the same old dishes. They'll act more like a personal chef. They will craft a unique investment strategy based on not just your financial goals, but real-time financial data. And then they'll also take into account your spending habits and even changes to your life circumstances, like a marriage, new child on the way, and so on. They'll be able to adapt dynamically as you move through different stages of life, almost like having a financial coach that's always on and always thinking a few steps ahead. So this is indeed a very, very exciting future.